Alright, y'all. This is the second video. So the first video we just went over setting up your trading view. What is trading view? How to use it. And just customizing it to your liking. So hopefully you guys. I'm trying not to say so much, Jesus. So hopefully you guys were able to, tweak everything to your liking. And for now, we're gonna get into the whole meat and bulk of this thing. I was envisioning this whole series to be like a couple videos long, but honestly, I'm just gonna try and keep it simply to technical analysis and how to read price charts like this, or this kind of price chart with candlesticks. Just because there's a whole lot of extra stuff that I might get into, but I don't want to get too off topic. If that makes sense, just because this video could be 30 minutes or it could be 2 hours, depending on what I cover. Because there's so much. I'm going off the dome a little bit, or for the most part at least, so I don't want to go off onto a tangent and then we're just listening to me ramble about stuff that's not going to say not important, but it's not really relevant to just being a beginner or someone with a little bit of knowledge wanting to expand a little bit more. Like I might cover some things that you may already know, but there might be two things that I say or show that might make something else click for you. So, but this is pretty much just to say what is this? This is what we're used to seeing, to be honest, right? So let me do this out right here. We're gonna keep it simple. I'm gonna write everything here so you guys can take your notes as well. Three markets direction. So the market moves in three directions, in three ways. The first one is market is bullish. Two, market is bearish. Three, sideways. Yeah, or range. I believe range is the official term. There's like three official terms. So bullish, bearish, sideways, and that equals uptrend. This is a downtrend. Whoops. I'm using my mic. It probably sounds crazy. You probably hear me typing this stuff crisply. Sideways. Ranging would be sideways. Also known as consolidating. Consolidation. You can say consolidation, you can say consolidating. It doesn't really matter. You can just say sideways. So the market's in a range, I guess. Okay. Excuse me. Okay. So we got bullish, three market directions. We have bullish, bearish, and range. Now, quick fun fact actually about bullish and bearish and where did Wall Street come up with these terms? So the way a bull attacks, right, is it puts its head down, uses its horns, and flings people up or things up, right? That's where bullish comes from. I shit you not. Bearish, a bear attacks with its paws, and it swipes downward. I shit you not. That is literally it. I forgot what book I read a couple years ago when I was first starting out. I think it was like Stock Market 101, little white book. I think that's the book that they described that, and I was like, "What? Is that simple?" Yeah, bullish versus bearish. And if we go on images, see, this is all we see. All right, so it represents the bull's horns, and that represents that. The name derives from a bull striking their horns upwards. Name derived from the downward paw motion. See, craziness. I was like, really? That's crazy. It's low key sometimes better if you did know that, because it's just like, what the hell. But the market also, Wall Street also uses hawkish and dovish. So we got animals in here. I think those are the only terms that are relevant to animals. Hawkish versus dovish. You'll see this more so with inflation reports. So this is more for forex. when we're looking at the head of the Federal Reserve and global banks, they'll be talking about the interest rates, right, for the economy. So hawkish, I believe it represents a hawk's talons. Let me see. This might show it. So a hawk is more like aggressive. I think it's the hawk's aggressiveness, and a dove's like what's opposite of aggressive. Y'all get what I'm saying? That's what that represents. So when the interest rate goes up, it's tightening the economy or the circulation of money, contracts the economy, which represents the hawks. Reduce, contain inflation. And then the opposite, decrease, expand, stimulate the economy. This was when they were giving everybody checks during COVID, printing more money, giving it out so the economy can keep on going, can keep flowing. There can still be money circulating. And then now we're in the process of trying to do that for these last 4 years. So stop blaming y'all's presidents. Jesus Christ. It wasn't Biden. It wasn't Trump. It's the Federal Reserve controlling this shit. And then we have a range, which is literally what it is. Just the market moving sideways. Something like this. Where there's no higher highs and higher lows, or they're equal higher highs and higher lows. Just equal both ways. Not really doing shit. No, it's not trending. Not trending is sideways. Pretty much. Next we have 3 types of analysis. Alright, so 1 would be technicals, which is what we're doing now. Technical. 2, fundamental. 3 would be sentiment. And I'll put market sentiment. Market sentiment. Technical equals reading price charts. Fundamental, which is what we're doing now. We're learning how to read the price charts and see what's going on. All this is just price having a face. We're just putting a face on prices. All this is just price and dollar amounts. And we have fundamental analysis, which would be macroeconomic events. Call me Mr. Typo, man. My computer sounds like a plane. Oh, it's because this thing is lagging. No wonder. I'm like, why can't I? Y'all know what it is. I'm leaving it. Fundamentals, macroeconomics, macroeconomic events. That's company news. And then we have market sentiment, which is overall mood, which is the overall mood of participants. I'll just write participants. When I say participants, I mean like investors, banks, other large hedge funds, companies, people who are participating in the market. What is the mood on the ground? What's the temperature overall? Like for example, crypto market's been hitting all-time highs over the last like 2 months. So the overall mood of the market is buying, risk on. Oh yeah, let me write that too. Overall mood of participants, risk on or risk off. Risk on the table? Are we putting the risk on? Are we investing our money into things that are riskier, such as gold, Bitcoin, things of that nature? Or is it going to be risk off, where we don't see Bitcoin and gold pumping, right? And people invest their money into safe havens. The reason I put company news is because if this was like stocks, options, the fundamental analysis for that would be, let's say Apple, like Steve Jobs passing away would be a company news event that would definitely affect the price of Apple. It probably did, but I don't remember the time that happened. Maybe it was 2016. Rest in peace, Steve Jobs. Otherwise, you could go look at it, or you could do that on your own and just go find the date and then see what happened maybe the following days after. Something like that, a whistleblower in the company puts the company on blast for doing something immoral or unethical. The company not making as much money as everybody thought it would, and shareholders and stakeholders didn't get paid as much, didn't get paid what they were expected to get paid in dividends and stuff like that. That can all affect a company's price. Those are fundamentals for a company. And then we have market sentiment. An example of that would be since COVID. The pricing of rent has gone up mostly everywhere. Honestly, we see people who are in the mid 20s. I'm 25. I live at home with my parents. We see other people moving home with their parents, moving back home after college. Trying to save up some money just so they could, afford to even get an apartment. Or even if they're able to get an apartment, you usually have a roommate or two just to split that heavy cost. And even the same thing for putting a down payment on a house. Prices have doubled, if not tripled, since COVID. So now even a down payment on a house went from being maybe 10, 20,000, now it's 40, 50,000 for the same price house that it used to be. So if you can't, if you don't have the financial stability and means, it's definitely tough. So you would say the overall mood of people looking in real estate would be to wait. At least that's what I've heard. Over the last few years, might as well wait. Prices are sky high. Even people who might be even looking to sell their home are kind of hesitant because then they have to, even though their home appreciated, so did everyone else's home. So now you're just pretty much buying a more expensive house that might not be as expensive or it's not valued at what it should be. Things of that nature. That would be the market sentiment. All right. So now we got these out here. We're gonna go over the market directions. So this is pretty simple, honestly. An uptrend consists of higher highs and higher lows. So what is that? Right here, high, low, higher high, higher low, higher high, higher low, higher high. So you have higher high, and we have higher low, higher high. My mouse is kind of lagging because I have all this stuff going. I'm walking off my laptop too, which is a couple years old, so I need to upgrade this year as well. So you get the gist here. Higher highs and higher lows consist of an uptrend. The market has to be creating higher highs and higher lows in order to be in an uptrend. It must be making higher highs and higher lows. It cannot be doing lower highs, lower lows, higher high, lower. It cannot be. It has to be an uptrend. Now, a downtrend would be just the exact opposite of that. So, as you can see right here, this is actually where it transitions and breaks. So, we'll get into that as well. Price goes down here. Pretty much, I guess you could say right here, but not really, but I'll add it in. Really, it made a big low, lower high, lower low. Now it's in the process of doing it again. So you would have something called a break of structure right here, right? So we have our higher low point, a higher high, but there was no higher low created where the price continued up. Because remember, a higher low would have to be higher than this low. So in order for this to continue being in an uptrend, price would have to come here and stop somewhere before this point, equal or before this point. It could have stopped at this exact point, right? And then continued up and keep the trend going. But because it did not do that, and it broke even, price went below, closed below here on the candlesticks. Let's switch over. This is price closed below here. Might be easy if I drew a box instead of my sideways ass thing. Like that, we can just draw a box like that. Price closed here, and then eventually closed below, and then it was starting to trend below here slightly. It was testing this level. And then it continued on downward, right? Because this happened, we'll call it a break of structure. And that's a break of structure is literally what that is. Price was trending upwards, making higher highs and higher lows, and it broke its structure and created a lower low instead. Right? So now that we went straight from higher highs and higher lows into a lower low, it's a break of structure where the market is showing signs that it's going to break. Because sometimes this could happen, and then sometimes this can happen, and then price can just can like do some crazy stuff and keep going up. But so now we have a lower high here. Price came down, broke structure, broke this higher low, created a lower low, pulled back up, created a lower high because this high is lower than this high, and then continued again. Lower low down here, lower high up here. Simple as that. So now this is a downtrend. Just like that. Went from a uptrend to a downtrend right here. These little moves in between right here that I wanted to showcase. This right here are called retracements. These are called retracements. This, I guess, let me see. Yeah, these are called retracements. So let me just draw that right there. And I'll type it up here. Retracement. Retracement equals it's a temporary direction change before continuing overall trend. Oops. I did do that. Yeah, my computer's on its last legs, man. This thing is tweaking. So it's temporary direction change before continuing the overall trend. Now, when this happens, this is just because it has to be balanced. It's like duality, right? Just a point where the market has to like calm down, and then we'll see the next push up. Calm down a little bit, next push up. Because there's no way. How do I describe this? When this is occurring, people who bought here are taking their profits here, and that results in selling. Because what you're essentially doing is when you take your profits out, you're essentially selling what you have back into the market if it's stocks, which creates a supply, and then it brings the price down because higher supply, right? If people are selling a bunch of stuff, it's going back on shelves, so the price is going to go back down and get rid of it. That's the simplest way I could try and put it. And then once it goes back to a favorable price, you see what happens again. Now we're at the next leg, same thing, next leg. And the goal as investors and traders here is to get in towards the bottom here. We don't know when the bottom is going to be, but we can learn technical analysis and draw up some stuff like this, and we can determine what's more probable to happen, what's more likely to happen. Right. So this is just called a retracement. These little pullback or retracement. You can say either or. So if we have a nice big push up, you can expect the market to cool off for a second, give people some time to take profits, to catch the opposite move going down instead, whatever the case is. But usually it's a shorter time period. For example, this move started down here. When it got to the top up here, it was about 42 days, right? And then from the bottom down here, that lasted 22 days, so about half the period. So we got about 6 weeks to 3 weeks. And then whatever it is there to there. So those are called pullbacks, and then we have complete reversals. This is low-key a reversal here, actually, because market was just trending up, and then it just reversed pretty much. It just went in the complete opposite direction. And sometimes it could just do that without warning, just like it did here. So we got retracement, and then we got reversal. Complete direction change, trend, direction and trend change. So we literally in real time, because this is live right here. Market is open Sunday night going into Monday. You had a higher high, higher low, higher high, higher low, uptrend, and then we just reverse right here into a lower high, lower low scenario. So market reversed at this point. Notice this. This is a little tip. Look at the price point to the right. When you're looking at your chart, you want to start to train your eyes to match the price that it's at as well. Notice how we went right into this key level. It will be called at 1.34 thousand flat. So we have a major key level, and then price decides to just tank right there, right? Things like that happen for a reason, because you gotta think who's driving these prices in these markets. The Bank of Japan, Bank of Bank of England, the Federal Reserve, Bank of Canada, your the biggest hedge funds in the country, in the world, hundreds of millions, billions of dollars. You got major companies. The countries themselves are importing and exporting various products back and forth. Look at U.S. and China. Almost every damn thing that we get comes from China. It's made in China. That's a bit. Those are business deals. Those are import export. Those things play a big role.